Imagine a world where every time you swipe your card, you're hit with an extra fee, a surcharge that feels like a hidden tax on your everyday spending. That's the reality many Australians face, and the Reserve Bank of Australia, RBA, has had enough. They're pushing to ban these surcharges altogether, but here's where it gets controversial. Banks are fighting back, threatening to raise fees and cut rewards if the ban goes through. Could this spell the end of credit cards as we know them? And what does it mean for the loyalty programs millions rely on? The RBA, which oversees the payment sector, argues that surcharges unfairly penalize consumers, especially those using debit cards. Consumer groups have cheered the proposal, but banks are sounding the alarm. In submissions made public this week, Australia's Big Four banks warned that eliminating surcharges could lead to higher annual fees, shorter interest-free periods, and reduced rewards. Westpac went a step further, accusing the federal government of failing to transparently communicate that consumers might end up footing the bill for this change. The bank's submission bluntly stated, "Neither the government nor the RBA has openly told the 17 million Australians with cards in their wallets that this proposal could bring the biggest market shift since credit cards were introduced. And this is the part most people miss. The current system effectively subsidizes credit card users at the expense of debit card users. The RBA and consumer groups, like Choice, argue this is fundamentally unfair. But banks counter that their warnings are credible. Block, the owner of Square and Afterpay, even described costlier credit cards as an intended outcome of the ban. So who's really paying the price here? The RBA's proposal would level the playing field, ensuring that low-cost debit card users aren't charged the same fees as high-end credit card holders. But it also raises questions about the future of credit card rewards programs, which are often funded by these underlying fees. Senior payments experts, speaking anonymously, suggest that these opaque and tricky reward schemes would likely be scaled back. One expert bluntly stated, "Does it make any sense that you get rewarded for paying for something? The whole system is built on tricking people." RBA analysis reveals that nearly a third of credit card fees go toward funding rewards programs, despite having no direct connection to transaction costs. Meanwhile, credit card usage is already declining, with 4 times more debit accounts than credit accounts in the system. Some consumers have even switched to buy now, pay later platforms, further reducing reliance on credit cards. Surveys show that less than a third of Australians depend on credit cards for their finances, primarily using them for emergencies or rewards. If banks respond by increasing fees and slashing rewards, customers might ditch their credit cards altogether. Rewards expert Steve Huey asks, if credit cards and debit cards offer no reward benefits, what's the point of having a credit card? Angel Zhang, a finance professor at RMIT University, adds that banks could pass on costs to consumers in other ways, such as hiking fees or interest rates on other banking products. The money needs to come from somewhere, Zhang notes. Macquarie Bank warns that even under the RBA's proposal, businesses and debit card users might still end up paying for credit card rewards programs. The RBA's payments boss, Ellis Connolly, acknowledged the backlash, stating that the bank has heard complaints loud and clear and will meet with affected parties before making a final decision by December. Here's the burning question. Is the RBA's proposal a fair move to protect consumers? Or is it a step too far that could backfire on everyday Australians? Let us know what you think in the comments. This debate is far from over.